So we were discussing the two different kinds of opinions broadly. So till previous session, we used to have one layman terminology. We used to call opinion is of two types: positive opinion or negative opinion, good opinion or bad opinion. We used to call it. But going forward, we are going to get accustomed to the technical terminology. So, opinion given by the auditor can be of two types. One is unmodified opinion, and the other one is modified opinion. So unmodified opinion is nothing but the technical name for whatever we are calling it as till now as positive opinion, whereas modified opinion is a technical name for negative opinion. And even I explained when auditor will give unmodified opinion. When the auditor has performed the audit, he performed audit procedures, he obtained audit evidence, and on that basis he is satisfied that yes, financial statements are free from material misstatements and also they are prepared as per applicable financial reporting framework. When the auditor is satisfied about these two things, he will give unmodified opinion. And what kind of terminology will be used in the opinion paragraph? The auditor has to make use of one of the two phrases. Either he has to make use of the phrase financial statements give true and fair view, or financial statements present fairly in all material respects. So any of these two phrases can be used in the audit report. So if you download any audit report, in the opinion paragraph, if you see any of this phrase, either financial statements give true and fair view or financial statements present fairly in all material respects, that opinion we call it as unmodified opinion. And even there are other names for unmodified opinion. We even call it as unqualified opinion and also clean opinion. So this is what we have understood. Then coming to modified opinion, when the auditor is not satisfied with the true and fair view of the financial statements, when auditor has found some material misstatements, or when auditor found that financial statements are not prepared as per applicable financial reporting framework, or when the auditor found that financial statements are misleading, then he doesn't want to say financial statements are giving true and fair view. He wants to give negative opinion. That opinion we call it as what? Modified opinion. And the modified opinion is further divided into three categories: qualified opinion, adverse opinion, disclaimer of opinion. So all the three, qualified, adverse, disclaimer, all these three kinds of opinion are different kinds of modified opinion only. All three are negative opinions only, but severity of the negative opinion will get changed. That's the only difference. So let us try to understand now when auditor will give qualified opinion, when auditor will give adverse opinion, when auditor will give disclaimer of opinion. All the three are nothing but different kinds of modified opinion only. So let us try to understand it. So we will start with by taking an example. I will explain all these three kinds of opinion with the help of one simple example. So assume there is a balance sheet of the company. This is a balance sheet of some company X Limited. Don't ask me why it is there in why it is there in horizontal format. So it should be in vertical format. Just for example, I can't draw schedule 3 format of the balance sheet. So for example sake, we will take this as balance sheet of some company, right? So in this balance sheet also, I will give you some financial details. There are fixed assets worth the sum 100 crore rupees. And under current assets, there are even subcategories. We have inventory 50 crores, trade receivables 30 crores, cash and cash equivalents some 20 crores. So the total of 200 crores of assets will be there. So now how much will be total of liabilities? We should not have any second thought. The total of liabilities also should be 200 crores. As I have told you, the balance sheet will always match in the real life. The place only where the balance sheet will not match is exam. That is our bad luck. We can't do anything about it. But generally in a practical world, balance sheet will get matched. So now let me give you the details of the liability side also. Share capital 50 crore rupees. Reserves and surpluses another 50 crores. Long term borrowings 60 crores. Short term borrowings some 40 crores. So this is a breakup of financial details of this company X Limited. So they have a total assets of 200 crores and even they have a total liabilities of 200 crores. And assume you are an individual, you are appointed as auditor of this company X Limited. You are supposed to verify these financial information and express your opinion. That is what your duty. You are an auditor. Now you started verifying financial information. You started obtaining evidence regarding each and every item of this balance sheet. First, you performed audit procedures on fixed assets. You did not find out any material misstatement. Everything is perfectly fine. You obtained audit evidence. Yes, there are fixed assets are there and the value is 100 crores. You got complete evidence. No issue when it comes to fixed assets. You are satisfied that yes, fixed assets value is correct. Then you performed audit procedures on trade receivables. You are satisfied there also. Yes, the trade receivables which has been shown at 30 crores is also correct. You have audit evidence. Then you verified cash and cash equivalents. Cash and cash equivalents also does not contain any material misstatement. Then you verified share capital, everything was fine. Reserves and surpluses, you got evidence, everything was fine. Long term borrowings also you have verified, everything was perfectly fine. Short term borrowings also correct, everything is correct. But there is a problem when it comes to inventory. In the inventory, when you performed audit procedures, you have some observations. So what is that observation is, in this 50 crores worth of stock which has been included in the balance sheet, I tried to check what is the basis for valuation, how this 50 crores of value has been derived. So I came to know that the cost of all the stock is 50 crore rupees, whereas NRV of the stock is 45 crores only. When I'm performing audit procedures regarding this inventory, I came to know that the cost of all the stock is 50 crore rupees, whereas NRV of that entire stock, net realizable value of that entire stock is 45 crores only. And we know that AS2 says inventory should be valued at cost or NRV, whichever is less. Yes or no? This is what AS2 says. So AS2, which is talking about valuation of inventories, that clearly says that the stock should be valued at cost or NRV, whichever is less. But what the company has done is, instead of valuing the inventory at cost or NRV, whichever is less, they have shown this inventory as 50 crore rupees. But as per accounting standard, what should have been the value of inventory? 45 crores only. But how much value management has shown? 50 crore rupees. That means if you observe carefully, here there is a misstatement. The item of financial statement, the item of the balance sheet, that too inventory, contains a misstatement. How much misstatement? There is a misstatement amounting to 5 crore rupees. Overstatement or understatement? Overstatement. The inventory has been overstated by 5 crore rupees. Inventory value should have been shown at 45. But what the management of the company is doing, instead of showing the value of inventory as 45 crores, they are showing the inventory value as 50 crore rupees. That means they are trying to overstate inventory by 5 crore rupees. So you found a material misstatement in the financial statements. You found a misstatement. That misstatement amount is 5 crores. Do you think it is material? Yes. The total assets itself is 200 crores. In the 200 crores itself, there is a 5 crores amount of misstatement. Yes, there is a material misstatement. So you found a material misstatement in the financial statements. Now you are supposed to express your opinion on this financial information in your audit report. Now, what you will say in your opinion? Paragraph. Definitely, we will not say financial statements are giving true and fair view. Why? Because we found a material misstatement. So we can't give here unmodified opinion. We will not be able to give here unmodified opinion. Why we will not be able to give unmodified opinion? Why? Because as an auditor, we found a material misstatement. So now, modified opinion you are supposed to give. Now, in the opinion paragraph, you have to use some terminology. So I will give you two options to choose from. You have to let me know which kind of terminology you will use it in the opinion paragraph. So these are the facts. This is what your observation. Inventory contains a misstatement of 5 crore rupees. Now you have to say something in your opinion paragraph. For that, I am giving you two options to choose from. Option 1, saying directly financial statements do not give true and fair view. This is one thing you can say. Directly say it in the opinion paragraph. Financial statements do not give true and fair view. This is option 1. I will give one more option. What option is? Except inventory. Except inventory, which contains a misstatement of 5 crore rupees. The rest of the financial statements give true and fair view. So I have given you facts, I have given you observations. So the key observation there is inventory contains a misstatement of 5 crore rupees. Now you have to tell your opinion in the opinion paragraph. I am giving you two options to choose from. Option number 1, saying directly financial statements do not give true and fair view. Option number 2, accept inventory which contains a misstatement of 5 crore rupees, financial statements give true and fair view. Which option will you choose from? If you are in the position of the auditor, step into the shoes of the auditor and let me know, if you are in that auditor's position, which option will you choose from? So if I am a prudent auditor, I will go with option 2. This option I will use. Why I will not use this option, first option? Why? Because see, the financial statements contain a misstatement. Agreed. That misstatement is material also. Agreed. 5 crores amount of misstatement. But is the misstatement so big enough to say complete financial statements are wrong? No, right? Rest of all the items of the financial statements are perfect. But only problem is it with what? One inventory only. What is that misstatement also? 5 crores. Agreed, financial statements contain a material misstatement. So I can't say financial statements are completely giving true and fair view. But at the same time, I can't say financial statements are completely wrong also. If I say financial statements are not giving true and fair view, I am giving a completely negative opinion. On the other hand, I can't say financial statements give true and fair view. If I say it, I am giving completely positive opinion. So I can't give completely positive opinion. I can't give completely negative opinion. So what I am trying to do is I am giving a positive opinion with a negative comment attached to it. Understood what I'm trying to say? So here in this case, I can't say entire financial statements are correct. Why? Because there is a misstatement. I can't say entire financial statements are wrong. Why? Because misstatement is there in only one or two few items. So what I will do is I will use this particular kind of terminology. What I will say in the opinion paragraph is except inventory. Except in the item of inventory, there is a misstatement of 5 crore rupees. Rest of the financial statements are giving what? True and fair view. The moment you find this terminology in the auditor's opinion paragraph, which terminology? Except or subject to certain items, financial statements give true and fair view. Except a few items, financial statements give true and fair view. The moment you find this terminology in the opinion paragraph, that opinion we call it as qualified opinion. Do we call that opinion as qualified opinion? How to identify qualified opinion? What terminology you will be able to find it in the opinion paragraph? So in case of qualified opinion, the terminology which will be used in the opinion paragraph is except inventory or except a few items, financial statements give true and fair view. The moment you find this terminology, what is that opinion? Qualified opinion. Clear, everyone? So just have this discussion at the back of your mind. Now I am proceeding further with the explanation. So once I discuss all the scenarios, then the entire concept will start making sense. I will give you summary, I will give you chart, I will make you write. Don't worry about it. Just keep on following the concepts, whatever I am trying to explain for you. Understood? Right. So let me extend the example a while now. Now I will take once again the same example. Okay, so let me redraw it once again. Now another scenario we are discussing. So what is that another scenario is? Once again, I'm doing audit of some company. The same company, assume I'm doing audit, X Limited, and a balance sheet of the company also is there. Fixed assets, 100 crores, same, previous like that only. Current assets, in that also inventory 50 crores. Trade receivables, 30 crores. Cash and cash equivalents, another 20 crores, a total of 200 crores. Now coming to liabilities, share capital 50, reserves and surpluses 50, long term borrowings some 60, and short term borrowings some 40. So here also a total of 200. Let me copy this. I'm going to use this example repeatedly. So what I will do is I will copy and keep it aside. Right. So now once again this example. Now assume this entity, a person is doing audit. Now I will tell you what my observations are, what the auditor's observations are. Now as an auditor, I have started doing audit of this company X Limited. Now my observations are something like this. I verified fixed assets. In the fixed assets, there is 10 crores worth of misstatement. In the inventory, there is some 5 crores worth of misstatement. In the trade receivables, some another 5 crores of misstatement. I verified long-term borrowings, here also some 10 crores of misstatement. I verified share capital, here also 5 crores of misstatement. So you conducted the audit, and when conducting the audit, you performed audit procedures, you obtained audit evidences, and those evidences are telling you that there are misstatements. You found evidence that in the fixed assets there is 10 crores worth of misstatement. You found evidence that in the inventory there is 5 crores worth of misstatement. In the trade receivables there is 5 crores worth of misstatement. So you performed audit procedures, you obtained audit evidences, and on the basis of that, you have concluded that there is a misstatement in multiple items of the financial statements. Now these are your observations. Now you are supposed to express an opinion. I will give you once again two options to choose from. Option 1, what you can say in your opinion is financial statements do not give true and fair view. This is one option. Other option, what I will do is you can start saying except inventory which contains a misstatement, except the fixed assets which contain a misstatement, except the cash and cash equivalents which contain a misstatement, except the reserves and surpluses which contain a misstatement, financial statements give true and fair view. So if I give you these two options now, and these are your observations by doing the audit, now which option will you choose from? Will you choose from option 1 or option 2? I will go here with option 1. I will not do here option 2. Why? Because a misstatement is not just there in one item, the misstatement is spread across so many items. See, if I have to give you one layman example, assume I am asking your opinion regarding one particular person. See, that person is having all good qualities except one or two bad qualities. You know a person who is having enough of good qualities but just one or two bad qualities. What you will say? So that person is a good person except one or two bad qualities. If a person is full of bad qualities, what you will say? You will not say, sir, that person is a good person only except a list of bad qualities. What directly you will say, sir, that fellow is a useless fellow. That fellow is a waste fellow. That person is a very bad person. This is what we do, no? Same thing applies here also. In the previous case, we have gone for second option because only one or two items are containing a material misstatement. But here if you observe, in this case, the misstatement is spread across so many items. The misstatement is not just material, it is so big enough to say entire financial statements are wrong. So in that case, if the misstatement is spread across so many items, then what I will say is, in my opinion paragraph, I will directly mention financial statements do not give true and fair view. Directly I will say that. Completely negative opinion. The moment you find this terminology in the opinion paragraph, that we call it as adverse opinion. That we call it as what? Adverse opinion. How to identify adverse opinion? Once again, with the help of terminology. What kind of terminology will be used in the case of adverse opinion? The auditor will directly say financial statements do not give true and fair view. Don't believe the financial statements. Nothing but he is saying financial statements are completely wrong. That is what we call it as adverse opinion. Adverse itself, the term adverse itself means something which is completely wrong. So adverse opinion means auditor is saying financial statements are not giving true and fair view. They are completely wrong. Don't believe in the financial statements. That's what we call it as adverse opinion. Clear? So till now we have discussed one scenario in which qualified opinion will be given, one scenario in which adverse opinion will be given. So let us write a summary of when qualified opinion has been given, when adverse opinion has been given. So I told you, in one scenario a qualified opinion has been given, in one scenario an adverse has been given. Just I am telling you summary, whatever I have explained to you till now. So qualified opinion has been given when auditor has performed audit procedures, obtained sufficient and appropriate audit evidence. Auditor has performed audit procedures and he obtained what? Sufficient and appropriate audit evidence. And on that basis, he has concluded that financial statements contain a misstatement. I'm talking about the first case. In that case, we gave qualified opinion, no. So auditor has performed audit procedures. So if I take you back in the first example, auditor has performed audit procedures of inventory and he came to know that inventory NRV was 45 and cost was 50. Management should have shown the value of inventory at 45, but instead they have shown as 50. So I have clear cut evidence there that financial statements contain a misstatement. How much amount of misstatement? 5 crores worth of misstatement. So on the basis of evidence, he concluded that financial statements contain a misstatement. Is it material? Yes, it is material. 5 crores in 200 crores is material. But is the misstatement so big enough to say complete financial statements are wrong? Once again, I'm asking you, is the misstatement so big enough to say completely financial statements are wrong? No, we can't say that. Why? Because financial statements are containing misstatement. 5 crore rupees. It is material enough. But it is not so big enough to say entire financial statements are wrong. Now, for that kind of misstatements, which are so big enough to say complete financial statements are wrong, we have one technical terminology. The misstatement which is so big enough to say entire financial statements are wrong, such misstatement will have a name. What is that name? Is pervasive misstatement. What is that? Pervasive misstatement. So in the case of qualified opinion, I found a misstatement of 5 crore rupees. It is material, but it is not pervasive. It is not so big enough to say completely financial statements are wrong. That's why we will give what? Qualified. That means we will say except inventory, rest of the items of financial statements are giving true and fair view. Why? Because the effect of the misstatement is just a material. It is not so big enough to say complete financial statements are wrong. This is how you understand it as understand the term pervasive. There is exactly definition given for the term pervasive that we will talk about it later, but for the time being you understand pervasive misstatement as such a misstatement which is very big enough to say complete financial statements are wrong. So here misstatement is material but not pervasive, so that's why auditor will give qualified. Now adverse, in which case auditor has given adverse opinion? When I say adverse opinion, I am referring to second case. In the second case also, when I have given adverse opinion, under what circumstances I have given it? I have obtained sufficient and appropriate audit evidence. I performed the audit, I performed audit procedures. On that basis, I have got evidences. On that basis of evidences, what I have confirmed? I have confirmed that financial statements contain a misstatement. Financial statements are containing a misstatement which are material, and they are not just material, they are even pervasive also. I am referring to second case. Here misstatements are there, not just in one item, fixed assets, inventory, trade receivable. So like that in so many items misstatements are there. These misstatements are not just material. These misstatements are so big enough to say complete financial statements are wrong. So that's why here the misstatement is material, and it is not just material, it is even so big enough to say complete financial statements are wrong, that it is pervasive. Now I will give adverse opinion. Understood everybody? So I have told you one circumstance where qualified opinion will be given. Even I told you one circumstance where adverse opinion is given. So in both the cases, I have obtained sufficient and appropriate audit evidence. But in the case of qualified opinion, I found that there is a misstatement. The effect of that misstatement is material only, but not pervasive. Whereas in the case of adverse opinion, I obtained audit evidence, and on that basis, I have concluded that financial statements contain a misstatement which is material and also which is pervasive. Understood? And the terminology which I use in the case of qualified opinion is except or subject to certain items. Financial statements give true and fair view. This is what the terminology which I use in qualified opinion. Whereas when it comes to adverse opinion, the terminology which I use will be financial statements do not give true and fair view. Directly, completely negative opinion I will give. Financial statements do not give a true and a fair view. Directly, straight away on the face, I will say it. Understood? So this is what adverse opinion. See, the discussion is not yet over regarding modified opinion. Still, we have to discuss few more scenarios. Understood? Just I have explained one case in which qualified opinion will be given, one case in which adverse opinion will be given. The scenarios are not yet over. Still, we need to discuss few more scenarios. Now let us continue with the next scenario. Once again, I'm going to make use of the same example, whatever I have taken. One example only, we'll try to cover different scenarios which could be possible out of it. So once again, I have copy pasted here the table, the example, whatever I have taken previously. I'm so lazy, I can't write it again and again. So just I have copied it previously itself. So now assume this is the company for which you are conducting an audit. Now while conducting the audit of this company, you are performing audit procedures and you have started obtaining audit evidences. You came to know that fixed assets of 100 crores are all perfectly fine, no misstatement. Trade receivables 30 crores, perfectly fine, no misstatement. Cash and cash equivalents, no misstatement. So rest of all the items also do not contain any material misstatement. But here also there is a problem with the inventory. But now what is the problem with this inventory is, in this inventory of 50 crores, there is some inventory included for a value of 5 crore rupees. In this 50 crores of inventory, which is stated in the balance sheet, 5 crores worth of stock was already included. But the problem with that 5 crores worth of stock is, this 5 crores worth of stock was kept in a godown, and that godown was actually sealed by GST department. Who seized it? GST department has actually seized it. So when any government authority comes and seizes any premises, you can't break the seal. If you break the seal, you have to go and sit behind the bars. So in this 50 crores worth of stock, 5 crores worth of inventory was included, but that 5 crores worth of inventory was lying in a godown which was seized by GST department. So you are not able to go inside that warehouse and check whether really 5 crores worth of stock is there or not. So the point which I want to make here is, out of this 50 crores worth of inventory, 45 crores you have checked it. 45 crores of stock you are able to go to the premises, you are able to go to the warehouse, check it, count it, all that you are able to do for 45 crores worth of inventory. But when it comes to this 5 crores worth of stock, you are unable to go and enter inside the premises and check whether really this 5 crores worth of stock is there or not. So the point which I want to make here is, out of this inventory for 5 crores worth of stock, you were unable to obtain audit evidence. For 5 crores worth of stock, you are unable to obtain what? Audit evidence. You are able to obtain evidence regarding all the items of the financial statements. But when it comes to this 5 crores worth of stock, you are not able to obtain evidence. Now what you are supposed to do? So rest of all the items you are able to obtain audit evidence, but this 5 crores worth of stock, you are unable to obtain audit evidence. Now assume that this 5 crores worth of stock has gone wrong. Really in the go down, no stock is there. That stock which was seized by the GST department, assuming that that go down does not contain any stock, management just tried to show that stock in a fake manner. So assume that since you are unable to obtain audit evidence, even if this entire 5 crore goes wrong, what will be the possible effect of the misstatement? Pay attention what terminology I'm using. Possible effect. Why I'm telling possible effect? Why? Because you don't have audit evidence. Just I'm assuming I'm not able to get evidence regarding 5 crores worth of stock. Assuming all that 5 crores worth of stock regarding which I'm unable to obtain evidence has gone wrong, what will be the possible effect? I'm telling possibility. Why I'm telling possible effect? Why? Because I don't have exact evidence to conclude. So just if I'm assuming, if that 5 crores worth of stock which I am unable to obtain audit evidence, what if it has gone wrong completely? What will be the possible effect? Will it be material? Yes, the possible effect will be material. Now you are supposed to express your opinion on the financial statements in the opinion paragraph of your audit report. And I will give you two options to choose from. So you are supposed to express your opinion and I am giving you two options to choose from. So what are that two options to choose from? The terminology which I will say is, you will say directly, we do not express an opinion. One option which I am giving you is, since you are unable to obtain evidence regarding that inventory of 5 crores, you can directly say it in your opinion paragraph. We are unable to express an opinion. Why? Because we don't have audit evidence. The other option which I will give you is, you can use the terminology except inventory regarding which I am not able to obtain evidence relating to a stock of 5 crore rupees. Rest of the items of the financial statements give true and fair view. Rest of the items of the financial statements give what? True and fair view. Except inventory. Regarding inventory, I am not able to obtain evidence for a stock amounting to 5 crores. Apart from that, rest of the items are giving true and fair view. If you are an auditor, if you are in the position of an auditor, once again step into the shoes of the auditor. Now tell me, which option will you choose from? Will you choose option 1 or will you choose option 2? Will you say we will not be able to express an opinion, or you will say except inventory, rest of the items of financial statements are giving true and fair view? If I am a prudent auditor, I will go with option 2. I will say the except inventory, in which stock worth of 5 crores I am not able to obtain audit evidence. Rest of all the items of the financial statements are giving true and fair view. Understood? Why? Because here also I am unable to obtain evidence regarding 5 crores. Assuming if that 5 crore goes wrong, the possible effect of that misstatement will only be material. It is not so big enough to say complete financial statements are wrong. Nothing but what? Here also, the possible effect of the misstatement is material, but not pervasive. The misstatement, the possible effect of the misstatement of 5 crores is material, but it is not so big enough to say complete financial statements are wrong. Understood, everybody? So, and as we know, the moment you find this terminology in the opinion paragraph, what is that opinion called as? Except some items, financial statements give true and fair view. The moment you find this terminology, what is that opinion called as? We call it as qualified opinion. Yes or no? So if you remember, I told you qualified opinion in two circumstances. Now if I make a summary of the two circumstances, so qualified opinion will be given in two cases. What are that two cases? Is auditor able to obtain sufficient and appropriate audit evidence, and on the basis of that audit evidence, auditor concluded that financial statements contain a misstatement, and the effect of that misstatement is material but not pervasive. I have evidence. On the basis of that evidence, I have found that there is a misstatement. The effect of the misstatement is material, but it is not pervasive. It is not so big enough to say financial statements are wrong. The other case in which qualified opinion will be given is auditor unable to obtain sufficient and appropriate audit evidence, and the possible effect, I don't know, have audit evidence. I'm just assuming that the item regarding which I'm unable to obtain audit evidence, if that goes wrong, the possible effect of the misstatement here also is material only. Here also the possible effect is not pervasive, not so big enough to say entire financial statements are wrong. So qualified opinion will be given in two cases. Either you have a evidence or you don't have a evidence, but the effect of the misstatement should be just what? Material but not pervasive. And what kind of terminology we will use in the case of qualified opinion? Except or subject to certain items, financial statements give true and fair view. So qualified opinion is not completely positive opinion, at the same time it is not completely negative opinion, it is lying somewhere in between. We are giving a positive opinion along with a negative comment. That is what the qualified opinion is about. So I told you two cases in which qualified opinion will be given, one case in which adverse opinion will be given. Now we have to discuss about disclaimer of opinion. For that also I will try to explain it with the help of example. The same example I will use it here. Yes. So the same example. Now assume you are conducting audit of this company. Now you are, when performing audit, you are unable to obtain evidence regarding 10 crores worth of fixed assets. No evidence is there for 10 crores worth of assets. Inventory, some 8 crores you are unable to obtain evidence. Some inventory you are unable to obtain 8 crores worth of evidence. Trade receivables also, in that you are unable to obtain 5 crores worth of evidence. For cash and cash equivalents, you are not able to obtain evidence regarding 3 crore rupees. So like that, in so many items of the financial statements, you are unable to obtain audit evidence. You're not having evidence, but in fact, you are unable to obtain audit evidence. Oh, just wait a minute. In fact, you are unable to obtain. Okay. You are unable to obtain audit evidence regarding so many items of the financial statements. Now you have to express your opinion in the opinion paragraph. I am giving you two options to choose from. Option number 1, saying directly we do not express an opinion. This is one option. The other option is except a list of items, except fixed assets, except inventory, except trade receivable, except cash and cash equivalents, financial statements give true and fair view. So you tell me which option will you choose from? Here I will choose first option. I will not go for second option. Why? Because I am not able to obtain evidence not just regarding one item, I am not able to obtain evidence regarding so many items. So that's why I will go with first option. Directly I will say it in my opinion paragraph. We do not express an opinion on financial statements. Why? Because I am unable to obtain audit evidence and the possible effect of all that misstatements, assuming whatever items which I am unable to get the evidence, assuming all that has gone wrong. If all that items regarding which I am not able to obtain evidence has gone wrong, the possible effect of that misstatement will be not just a material, the possible effect of the misstatement will be so big enough to say entire financial statements are wrong. So here the possible effect will be pervasive also. So that's why I will say directly, we do not express an opinion. We are unable to express an opinion because there are so many items regarding which we are unable to obtain audit evidence. So whenever you find this terminology in the opinion paragraph, that we call it as disclaimer. That we call it as what? Disclaimer of opinion. We are unable to express an opinion. Disclaimer means what? Preventing yourself from doing something. Disclaimer of opinion means what? You are saying I'm unable to express an opinion. So that's what we call it as what? Disclaimer of opinion. So these are the circumstances when qualified opinion will be given, when adverse opinion will be given, and when disclaimer of opinion will be given. Clear everybody? Now let us try to make one summary of all the three modified opinions when qualified opinion will be given, when adverse opinion will be given, when disclaimer of opinion will be given. Let us make one summary of all the circumstances in which different kinds of modified opinions will be given. Let us try to do it now. So let us write a summary now. So modified opinion. And this modified opinion will be of three types. Sorry, I'm very bad at drawing the lines. Right. So this modified opinion will be of three types. Number 1, qualified opinion. Second one is adverse. And third one is disclaimer. So first of all, qualified opinion. Qualified opinion will be given in how many circumstances? Qualified opinion will be given in two circumstances. So what are that two circumstances? One is auditor obtained sufficient and appropriate audit evidence. Auditor has performed audit procedures and he has enough of evidence. Whereas the other case is auditor unable to obtain sufficient and appropriate audit evidence. So auditor can give qualified opinion in two cases. Number 1, auditor has obtained sufficient and appropriate audit evidence. The other case, auditor unable to obtain sufficient and appropriate audit evidence. But in both the cases, in case if the auditor has obtained sufficient and appropriate audit evidence, on the basis of that audit evidence, auditor is concluding that there is a misstatement in the financial statements, and the effect of misstatement is material but not pervasive. That means misstatement is material, but it is not so big enough to say entire financial statements are wrong. That means financial statements contain a misstatement whose effect is material but not pervasive. Same here also, auditor is unable to obtain sufficient and appropriate audit evidence, and the possible effect. Why we are using the term possible effect? Why? Because we don't have evidence, we are just assuming. So here the possible effect of the misstatement, here also, what is the possible effect? Here also the possible effect of misstatement is material only. It is not so big enough to say complete financial statements are wrong, nothing but it is not pervasive. See, just understand the layman meaning of the term pervasive, the misstatement which is big enough to say financial statements are wrong. But there is actually a technical definition given to this term pervasive, which we will read in the material and try to understand about it. So these are the two cases in which qualified opinion will be given. And what is the terminology which we use here? How to identify qualified opinion? The terminology which will be used here is except or subject to certain items. That items will be explained. Except or subject to certain items, financial statements give true and fair view. The moment you find this terminology, what kind of opinion it is? It is a qualified opinion. So this is what regarding qualified opinion, and these are the two cases in which qualified opinion will be given. Now talking about adverse opinion. Adverse opinion will be given only in one case. Adverse opinion means what? Completely negative. I am saying financial statements are completely wrong. And when I can say completely financial statements are wrong? See, if you are saying a person is a very bad person, when you say that opinion, when you know about that person very well or when you don't know about the person? If you are saying a person is a very bad person, when we know about that person, will we say it, or when we don't know, we will say it? Definitely when we know it. In the adverse opinion also, if I am saying financial statements are completely wrong, when I have evidence, I will say it, or when I don't have evidence, I will say it? Definitely when I'm having audit evidence. So that's what this particular adverse opinion also. Adverse opinion is given in only one case, and that case is when the auditor has obtained sufficient and appropriate audit evidence. Why? Because we can say something is completely wrong only when we have evidence. So auditor is having sufficient and appropriate audit evidence, and on the basis of that evidence, auditor concluded that there is a misstatement in the financial statements. And what is the effect of misstatement? The effect of misstatement here is not just a material. It is material, agreed, and it is not just a material, it is even pervasive also. It is material and pervasive. Now coming to disclaimer of opinion, when auditor will give disclaimer of opinion? When disclaimer of opinion means what? Once again, one thing I forgot, the terminology which we will use here. Auditor will say financial statements do not give true and fair view, completely negative opinion. Now disclaimer. Disclaimer means what? I'm saying I'm unable to express an opinion. For example, if I asked you your opinion about one person, you are saying no, I don't know about that person. The same thing, disclaimer is somewhat similar to that. So auditor is saying we don't know, we are unable to express our opinion on financial statements. When auditor will say it? When he have evidence or when he doesn't have evidence? When the auditor is not having evidence, then he will say that terminology, that they are not able to express an opinion. So disclaimer of opinion will be given in one circumstance, when the auditor is unable to obtain sufficient and appropriate audit evidence. Auditor is not in a position to obtain sufficient and appropriate audit evidence. And the possible effect. Why the term possible effect is used here? Why? Because I don't have audit evidence, just I am assuming. So possible effect of misstatement, here also the possible effect of misstatement is not just material It is even pervasive also. It is so big enough to say complete financial statements are wrong. And here, what kind of terminology will be used? Here, the terminology which auditor will use is, we do not express an opinion on financial statements. This is what the terminology which will be used. So these are the different kinds of qualified, adverse and disclaimer of opinion. All the three will form part of broad category of modified opinion. And if you observe carefully, qualified also contains some negative opinion, adverse also contains some negative opinion, disclaimer also contains some negative opinion. So let me show you now the practical examples. Sir, will this qualified, adverse, disclaimer, does these kind of opinions will be given in real world? Yes, they will be given. Let me show you some examples now for you. So we will first, I will show you some opinions. You have to tell me which kind of modified opinion it is. So I will download S Bank's annual report. So this is actually S Bank's annual report for the year 1920. Let me directly take you to auditor's report here. So if you read this opinion paragraph, they have given the name but don't observe on the title. Just let us try to find out which opinion it is by going through terminology. So let me read it here. In our opinion, and to the best of our information and according to the explanation given to us, except for the effect of matters, except for certain matters, the standalone financial statements give all the information required and they give true and fair view. If you read this sentence, what is the terminology they are using? Except for certain items, financial statements are giving true and fair view. And we know that the moment we find this terminology, except for certain items, financial statements give true and fair view, what opinion it is? It is a qualified opinion. So auditor has given here which opinion? S Bank auditor for the year 1920. They have given which opinion? Qualified opinion they have given. How did we identify? By reading the terminology. What terminology is there? Except certain items, financial statements are giving true and fair view. Now let me show you one example for disclaimer of opinion also. For that, I will download this Everready Industries annual report. In that also 1920. So this is the annual report of Everready Industries. So in that also, I will take you to directly audit report. And 47 page number. Yeah. So this is audit report of Everready Industries. So as you could see, title is there, which is independent auditors report. Addressee are there to the members of the Everready, to the members of the company. Then we have opinion paragraph. Let us try to read the terminology and find out which kind of opinion it is. So if you read this opinion paragraph in the audit report, they are saying something called, we do not express an opinion on the accompanying standalone financial statements of the company. So what they're saying, we do not express an opinion. So when you read this terminology, we do not express an opinion on the accompanying standalone financial statements of the company. What kind of opinion it is? Disclaimer. How did we identify this is a disclaimer? We identified it by way of terminology. So that's what even we have written in the chart also. In case of disclaimer, what terminology will be used? We do not express an opinion. Here auditors are using the phrase, we do not express an opinion on the financial statement. So what kind of opinion it is? Disclaimer of opinion. Understood? So these are the circumstances in which qualified, adverse or disclaimer of opinions will be given. So with this, we have understood what are different kinds of opinions. and when which opinion has to be given. So we have understood what is unmodified opinion, what is a modified opinion, and what are different categories of modified opinion. So why we have discussed about all these opinions? Why? Because we are discussing something called contents of the audit report. In that contents of the audit report also, first we understood a few contents like title. We have understood the title will always be independent auditors report. Then we have understood addressee will be the members of the company. Then the third content is opinion paragraph. As a part of that understanding of the opinion paragraph, we have understood what are different kinds of opinion. So first let us try to read till here whatever we have understood, then we will proceed further. So let us try to understand what are different kinds of opinion. Just reading, participating, explanation, we are already done. So just let us try to quickly go through and complete it. Yeah. So this opinion related discussion is there in SA 705. SA 705 is the standard which is talking about what are different kinds of opinion and what are different kinds of modified opinions. So all this discussion, whatever we have understood till now, everything is there in SA 705 in the same chapter I have given. So let us try to read it. So different types of opinion. The opinion expressed in audit reports issued by statutory auditors can be broadly divided into two categories. What are they? One is unmodified, other one is modified opinion. Let us see what they are saying about unmodified opinion. An auditor expresses an unmodified opinion when he is satisfied that the financial statements exhibit a true and fair view of the state of affairs and operations in an enterprise during the period. That means when the auditor is satisfied that yes, financial statements are giving true and fair view, they are not containing any material misstatement, they are not misleading, and even they are also not conveying wrong information. When the auditor is satisfied, then auditor will give unmodified opinion. There are other names for this unmodified opinion. We even call it as what? Either clean report, or even we call it as unqualified report. So if you read the phrases clean report, unqualified report, everything conveys the same meaning. And an auditor issues an unmodified opinion when he finds that, when generally auditor will give unmodified opinion, nothing but they are giving some circumstances. The financial statements have been prepared using generally accepted accounting principles like gaps have been followed, like concept of conservatism, prudence, materiality, substance over form. So when auditor is satisfied that yes, financial statements are prepared as per generally accepted accounting principles, and also the financial statements comply with relevant laws and regulations. When the auditor is satisfied that the financial statements are prepared as per laws and regulations, as per Schedule 3, as per accounting standards, as per Companies Act, and also the financial statements are prepared as per applicable financial reporting framework, and also any changes in the accounting principles or in the methods of their application and the effects thereof have been properly determined and disclosed. Nothing but they are telling what does an unmodified opinion indicate. If the auditor has given unmodified opinion, what he's trying to convey? He's trying to convey that financial statements are prepared after following all the gaps. After financial statements are prepared as per laws and regulations. Financial statements are prepared as per applicable financial reporting framework. If there is any change in accounting policy, that was properly disclosed. I can keep on adding the points. That means auditor is trying to say that financial statements are free from material misstatements. Auditor is trying to convey that the financial statements do not contain any material misstatement like fraud or error. So like that, I can keep on adding the points. Just for example, they have given 4 points. What does unmodified opinion indicate? It indicates financial statements are prepared as per GAAP, they are prepared as per laws and regulations, they are prepared as per applicable financial reporting framework, and if any changes in the accounting policies are there, they have been properly disclosed. Now coming to modified opinion. As we know, modified opinion contains 3 things. What are they? Qualified, adverse, and disclaimer. So first we will try to understand definitions of qualified, adverse, disclaimer. Then we will come back to this second point. So different types of modified opinion. The following are various kinds of modified opinion. What are they? Number 1, qualified. As I have told, qualified opinion will be given in how many cases? 2 cases. What are they? An auditor expresses qualified opinion on financial statements when the auditor has obtained sufficient appropriate audit evidence and concludes that misstatements either individually or in aggregate are only material but not pervasive. Next one. Other case in which qualified opinion will be given, the auditor is unable to obtain sufficient appropriate audit evidence on which to base his opinion but concludes that the possible effect of undetected misstatements on the financial statements here also could be what? Material but not pervasive. So qualified opinion will be given in two cases. Either you have a evidence or you don't have a evidence, but the effect of misstatement should only be material but not pervasive. Adverse opinion. In how many cases adverse opinion will be given? Only in one case. What is that? An auditor expresses an adverse opinion on the financial statements when the auditor has obtained sufficient and appropriate audit evidence and concludes that misstatements, either individually or in aggregate, are not just material but also pervasive to the financial statements. Now, when disclaimer will be given, the auditor shall disclaim an opinion when the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, and the auditor concludes that the possible effect of the misstatements is material and also pervasive. So whatever has been given in the paragraphical format, that's what we try to summarize it in the form of chat, nothing else. That's what we have done here. The same thing has been explained in paragraphical format. That's the only difference here. 1 second. So like this, whatever chart we have developed, the same content in the chart has been written in the form of paragraphs. So these are three different kinds of modified opinion. Now we have to give a definition for modified opinion also, no? We have given definition for different kinds of modified opinion. Modified opinion. What is the definition of qualified? What is the definition of adverse? What is the definition of disclaimer? We have seen. Now we should even define the term modified opinion, and we should define the term modified opinion in such a manner that it will take into its perspective qualified opinion also, adverse opinion also, disclaimer of opinion also. So modified opinion is having three types: qualified, adverse, disclaimer. We define individual modified opinions, like what is definition of qualified opinion, what is definition of adverse opinion, what is definition of disclaimer, we have understood. Now we need to define modified opinion also, and we need to define modified opinion in such a manner that it should take into its perspective qualified also, adverse also, disclaimer also. Let us see how the modified opinion can be defined in such a manner that it will cover all the scenarios of qualified, adverse, disclaimer. Let us see. In the following circumstances, the auditor shall modify the opinion. When I say modify, that could be either qualified, that could be either adverse, that could be even disclaimer also. In audit report, in the following circumstances, auditor should give modified opinion. When the auditor concludes that based on audit evidence obtained, that means auditor has obtained audit evidence, and on that basis auditor is concluding that the financial statements are not free from material misstatements. So auditor has obtained audit evidence, and on that basis auditor is concluding that financial statements are not free from material misstatements. That means financial statements contain a material misstatement that auditor has obtained audit evidence. Now in this case particularly, which kinds of modified will be appropriate? Here which kinds of modified will be appropriate is either qualified or adverse. Why either qualified or adverse? Why? Because if the auditor has obtained evidence and if he has concluded that financial statements are free from material misstatements, if the misstatement is material only but not pervasive, then he will give qualified. If the auditor concludes that the effect is material as well as pervasive, then he will give adverse. Why? Because it is a case of audit evidence obtained. Understood? So just saying that when the auditor has obtained audit evidence and concluded that financial statements are not free from material misstatements, here we will modify. For sure we will modify, but I am telling which kind of modification will be suitable here. Which kind of modification? Either a qualified or adverse. When qualified, when the auditor concludes that misstatement is only material but not pervasive. On the other hand, if the auditor concludes that misstatement is material and also pervasive, then he will give what? Adverse. Why? Because he is having evidence. The other case, the auditor is unable to obtain sufficient and appropriate audit evidence to conclude that the financial statements as a whole are free from material misstatements. So what they are saying, even if the auditor is unable to obtain audit evidence to conclude whether the financial statements are free from material misstatements or not, auditor is unable to obtain audit evidence, then also auditor will modify. Now here which kind of modification? Here also you will modify, but which modification? Disclaimer? Not just a disclaimer, either qualified or disclaimer. Why? Because when we don't have audit evidence and when we conclude that the effect of the possible effect of the misstatement is only material but not pervasive, we will give qualified. On the other hand, when we don't have audit evidence and when we conclude that the possible effect is material and also pervasive, then we will give disclaimer. So this is how modified opinion has been defined. And if you observe carefully here, in the definition of modified opinion, it is including qualified also, it is including adverse also, it is including disclaimer also. And definition of qualified, adverse, disclaimer, that we have seen separately in that next paragraph. Hope you are clear with this modified opinion definition. Nothing, guys. This modified opinion has been defined in such a manner which will take into its perspective qualified, adverse, disclaimer. And what is individual definition of qualified, adverse, disclaimer? That also we have seen it. Clear? So this is what regarding qualified, different kinds of modified opinion and unmodified opinion. Remaining discussion we will try to have it in our next session.